Kitco Mining's special coverage of the Gold Forum Americas is brought to you by Metalla Royalty and Streaming.
Hitting it out of the park with gold production, costs and exploration, Alamos Gold is one of the most exciting gold producers of 2023. This is Paul Harris for Kitco Mining at the Gold Forum Americas in Colorado Springs. To tell us more is John McCluskey, President and CEO. John, welcome to Kitco.
Thank you very much. Good morning.
Now, as I said, Alamos has been hitting it out the park this year with your results. What's the secret of your success?
It's really not much of a secret, and it's never essentially confined to 1 year. There's been a several year period where we've been building towards this success, and we're more or less riding the wave now. We've executed very well on all of our projects. We're generating tremendous cash flows now while we're in a growth phase, and that's a tough thing to achieve usually. On top of that, we're maintaining costs, and this is something that you see the industry having a struggle with. There's been inflationary pressures, certainly with the oil price and so forth. So we've differentiated ourselves to some extent. The small number of companies that have been able to maintain costs while meeting their production forecasts, those companies are doing better.
Okay, now you talk about your growth pipeline, and you've got several projects underway, Island Gold being the one that you're currently building. Then you've got Lynn Lake, and you've got some other things in the pipeline. How does your growth pipeline look like, and what's the timing for that to come into play?
So we're currently forecasting about 500,000 ounces of production for 2023. That's going to grow incrementally over 24 and 25, just with some of the work we're doing at Island Gold. It will ultimately take another step up in 2026 when we complete the shaft at Island Gold and start mining from utilizing the shaft and the expanded mill. That will bring down costs as well as increase production from current levels, around 150 or so, to closer to 300,000 ounces of production. So we'll see an incremental jump to roughly 600,000 ounces of production. Subsequent to that, we will have been developing the Lynn Lake project, probably starting in 25. So that would be coming on late 27 likely, and then we're going to see another bump that will take production up to around 800,000 a year. So that's the track we're currently on. As you're aware, we're also sort of working on a new discovery at Mulatos, and it's not quite clear how that all fits the plan, because this discovery is still underway, and it's going to require a mill for us to produce that ore, because it's much higher grade than what we're mining from our heap leach operations. These are sulfide ores grading around 5 grams. By the time we bring those on, we're just going to have to see how it will play out in terms of the production profile. Say from 26 on, it could start having an impact.
Okay. Now you mentioned that inflation has been a challenge for the sector in general in recent years. Your recent feasibility study on Lynn Lake showed a lot of improvement in many different aspects, not least the economics. Are you starting to get on top of inflation or mitigating its impacts?
One of the things that gives us confidence in our CapEx for Lynn Lake is that we've finished 70% of the detailed engineering, and we've also incorporated the permits. As you know, we've acquired both federal and provincial environmental permits, and so all the requirements under those permits have been incorporated into the costs. So the first thing is, you publish a number, you want to be able to stick to that number. In this case, it's $630 million, and I feel very confident with the inflation factors that you normally put into a study like that we'll be able to meet that guidance, that estimate. But as far as keeping costs in check, it's really a question of the mining industry by and large. We're price takers. Where we can achieve synergies as we have in Ontario between, because we have two operations, it gives us better buying power, and we're doing a bit better than we previously were when we just had Young-Davidson. Building a new project is it's going to be a challenge, and it's best to start off with a really good study and a really solid estimate. I can't. It's very difficult to predict just what kind of inflation we're going to see in the next few years. I don't think it's going away, but as far as our island project goes, where we've been in construction now for over a year, we really we're ahead of the curve on that one, and we don't see any. We haven't run into any surprises, I would put it that way, with respect to our costs. We're sort of right on budget on that front.
Okay. You recently put out some more exploration results from Mulatos. Very, very encouraging, very, very good. So I want to ask you how that's changing the future potential of Mulatos. You referred to it a moment ago, but also I'd like to bring in the aspect of sort of country risk or country risk perceptions, because there's been a notable sort of, let's say, flight to safety to sort of Canada, to the US in recent years. In Mexico, the president announced a new mining law earlier this year, which is pretty unpopular with the sector. Most companies individually are challenging that or putting injunctions in. And I think I understand the industry collectively is looking to have that struck down. How does Mulatos fit in with your development pipeline and the political risk scenario?
Well, Mulatos has been in production for quite a long time now. We've been operating there going back as a developer from 2001. We achieved production by 2005. So by 2023, we've been established there for quite a long time. And for most of the important factors under those new laws and guidelines, the operation is grandfathered. So we're not really facing anything in terms of impediments, and that goes with developing something new. Even though we're going to be building a mill and effectively operating a new mine within Mulatos, mining sulfides, having for the most of the time we've been operating at Mulatos, we've been heap leaching oxides, but we have had one underground operation there, and we had a small 500 ton per day mill operating. So that's all been permitted in the past. So we're not really facing any new permitting challenges at Mulatos. They have what's called a MIA. This is an expansion of your existing operations, and this is something that we've actually undertaken with the Obrador government already. For example, our La Yaqui Grande project was permitted under the Obrador government, and that was part of a MIA process. And I don't think we're going to run into any difficulties in terms of developing our PDA zone. In terms of going elsewhere in Mexico or doing something new in Mexico, I think it's very challenging right now, and I don't think things have absolutely settled with respect to how these laws are going to ultimately land, and the industry, I think, is doing a pretty good job making its case to the government, and I'm hopeful there's going to be some compromise so that Mexico remains a viable place to invest and to operate mines.
Okay, let's talk more about the gold market in general. Recent years have seen gold producers exercise capital discipline, pay dividends, give multi-year guidance, production guidance, yet they still seem incapable to attract investor interest. What more can be done?
Certainly a higher gold price would inspire more confidence and probably more excitement in the sector. But for operators, we're doing very well with the margins that we have. In our case, we have all-in sustaining costs right now of around $1,150, and as I mentioned earlier, those are going to continue to decline. So with $1,940 gold, we're doing very well. That said, the market is obviously picking and choosing. It's much more selective than I've seen in the past, and there are different factors that come into investor consideration. One is, you can see a bifurcation between the producers and the non-producers. So I think life is very difficult for the developers right now. Producers, by and large, are doing better, but even among the producers, there is more of a focus on political risk, because there's been a number of cases over the last few years where investors have been hurt when projects have been closed down or otherwise run into development problems and so forth. Those kinds of risks are unpalatable to investors right now. So again, I see a bifurcation there. There's also a matter of execution. The companies that have been executing, maintaining costs, those companies are doing better. So I think we're going to see more of that going forward. But that expression, a rising tide floats all boats. I think the whole sector effectively will do much better if we see a breakout in the gold price in the year to come.
I want to get your thoughts on one particular aspect. I hear an increasing number of people critical of the sort of 5% discount rate typically used in economic studies and net present value calculations. In an interest rate environment where a treasury bill is 5%, using a 5% discount rate, the argument goes, doesn't adequately reflect the cost of capital, and therefore the numbers in that study are, not really reliable.
Yeah, you're diving into the the heart of it there, and this is always going to be an issue in terms of trying to present a case for a development project, or valuing things using net present values. What discount rate do you apply? It's arguable that if you get too strict with any of these typical applications, you're not going to develop anything. And what I've noticed is with the good projects tend to be heavily underestimated, and the poor projects are overestimated. And I would say if you look at the projects that have failed, they never should have been financed in the first place. How did they get there? I don't think it was all a question of cost of capital issues. I think there was other key points that were missed. For the ones that have done well, you're talking about Alamos hitting it out of the park. The last two projects we've developed, Young-Davidson, Yaqui Grande, they've turned out tremendously well, and now we're seeing the same for Island Gold. It's arguable that for years those projects were heavily underestimated, and now they're delivering tremendous cash flows for investors. Was the investment justified? What were the discounts we were using appropriate under the circumstances? That's an open question. But you've got to have some reference, and my view is if we get too strict with these estimates, we're going to leave projects that should be developed. We're going to leave those undeveloped, and to me the most sensitive issue has always been the price of the commodity, and the commodity prices have been fluctuating wildly. I mean, just look at lithium in the last little while. If you really estimated your cost of capital perfectly, raised what you needed, developed the project, and the copper price collapsed or the gold price collapsed, whatever it happens to be, you could come to the conclusion, was I using the appropriate discount rate? Where do the sensitivities lie? And those are going to be ongoing challenges for investors looking at the commodity space.
I think this is a rabbit hole we could get quite lost in if we pursued it further. Okay, current market prices of a lot of companies represent great opportunity for gold producers such as yourself to perhaps acquire and build out their development pipelines. Why don't you think we've seen more development stage and exploration stage companies being taken out?
Well, I think you were pointing it out earlier that the mining industry has suffered a lot of criticism for lack of discipline, for destruction of capital, for ill-timed M&A transactions and so forth. It got to the point where if a company announced an M&A transaction, there was a big fallout in the share price. Just the assumption being that the company's overpaying for the assets, or they're buying something that in the end will ultimately dilute shareholders. And if you look at if you did a case study on 20 or so transactions that took place in the mining business, practically I'd say much more than half of them didn't deliver value. And that's a legacy that we all carry on our shoulders. So what do you do about it? I think you've just got to continue to deliver. And part of what we're seeing, we are seeing transactions, but if you looked into the background of many of the transactions that are being done, they took years. So I would say the management was being very disciplined, looking very, very carefully at the target asset, target company perhaps, and it's taking more time for them to get comfortable. But by the time they pull the trigger and buy it, they can make a very solid case for their investors that this is going to be an accretive acquisition, and one that ultimately makes the company stronger. And I think that's what we're all trying to achieve. Why aren't we seeing more? I think it's that timing issue for one. And I think in other cases, there are projects that look excellent. They look very, very good from 35,000 feet. But by the time you start digging down into the weeds, you find there are risks. And we've talked a bit about political risk, but there's metallurgical risk, there's engineering risks, any number of risks. And companies aren't just diving into taking that type of risk on in this kind of mining environment and in this investment environment.
Yeah, I think we're still very much in a risk-off environment. We're at the Gold Forum America, so perhaps the key question: when are gold stocks going to get a break?
That's a good question. As I've said, the market's been selective. Alamos has been doing relatively well over the last 18 months, after being in the doghouse, you might say, for a good 3 years. We got here by being very disciplined and by executing on our forecasts, and essentially for the last 8 or 9 quarters, we've delivered on our production and also on our development pipeline. Things have worked out very, very well. Currently, we're expanding the Island Gold project. We have a shaft that we're sinking down to 1,350 meters. That's all going very well, and we can keep our investors well informed about those developments, and as long as we're executing, maintaining things on track, we're going to maintain this valuation, and it's not a crazy valuation in any case. If you're trading at 1 times NAV in this market, that's a win. When the peer group is trading at 0.5, 0.6 times NAV, it begs the question: do you want to use that premium to take over more things? Well, to be honest, this is the time to be more cautious than ever, because you don't want to get overly aggressive and ultimately lose all that goodwill that you've built up with your investors by being disciplined and by executing so carefully. So I think that's what you're going to see from Alamos. I frankly think you're going to see that right across the industry. That means when you see a transaction announced, you can bet your bottom dollar that the managements on both sides of that transaction have looked at it very, very carefully before they've shook hands and decided to make a deal.
Real conviction.
Yeah.
Well, I wish you the best of success with your ongoing developments and continued success financially. This is Paul Harris for Kitco Mining at the Gold Forum Americas in Colorado Springs. John McCluskey, thank you very much for joining us today.
Thank you, Paul.
And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Gold Forum Americas is brought to you by Metalla Royalty and Streaming.